All right, it is 12 noon in the East Coast. Welcome to our number 16th webinar. Today is a special webinar of the Association of Nigerian Physicians in America. The topic for today's webinar is Insurance, the Misunderstood Class, Income and Asset Protection, presented by WebRx. My name is Stanley Okoro, and my co-host is Susan Edionye. Today, September is Saturday, April 3rd. And I would like to present our national president, Dr. Christopher Okunseri.
Thank you, Stanley, and welcome everybody to another important opportunity for us to learn about the topic for today. For those of you who are not fully aware, for the new people who are joining us today, Ampa again is a 501c3 organization. We are well over 25 years of age, so we are a full-grown adults, as you would expect. And we represent over 5,000 physicians and dentists across America and in the Caribbean. And quite honestly, our organization have a lot of benefits to members. One of the benefits we have is actually this opportunity to learn from the experts, which quite honestly, we would have actually had to go to their offices to pay for this sort of service. So I want to say that I thank Mr. Eugene Kanu for this opportunity of bringing in experts, and I would hope and look forward to members, looking forward to his organization when expertise of this nature are needed. Again, our organization is very key on professional development, which is a member benefit. We are very much interested in providing leadership opportunity for our members. And importantly, again, is the referral network amongst the members and the networking opportunity that we continue to benefit from. And quite honestly, we want to support ourselves in times of joy and sorrow. And we also engage in the landmark activity of our organization, which is the medical mission. The medical mission takes us to Nigeria, our home country, to provide free medical care, and all surgical specialties are invited and welcome to volunteer their time and service. And that is a huge piece for us as an organization. So at the end of the day, I want to take this opportunity to thank everybody on this call, the organizers, Dr. Stanley Okoro, co-moderator, Dr. Susan Edionye, for all the work they have been doing over the last 1 year, and Mr. Eugene Kanu again for his continuous performance and provision for us to benefit from experts, who really we all appreciate. So thank you very much. And the panelists, quite honestly, I really, on behalf of the organization, appreciate your time and your expertise, and we look forward to hearing from you at this point. Thank you very much, and that's fine.
Thank you, Mr. President. Susan. You are muted.
Thank you. Sorry. Good morning, everybody. My name is Dr. Susan Edionye, and I am the Ampa National Membership Chair. So I want to welcome everyone and mirror what Dr. Okunseri said. We want you to stay connected with ANPA. As you've just heard, we're doing a lot of things for our members, and we continue to improve and grow and add new features. So we want you to stay connected. We are on social media. Our social media platforms are active. You can find us on Instagram, Facebook, and Twitter at the handles that are listed on the screen. Reach out, share this with your networks. Also email. We have a robust email communication platform where members can engage and share important information or share their recent accolades. So just be aware, if you are part of AMPA and you're not aware, we do have a listserv at our AMPA e-group. And then we do send regular communications from our national body. So look out for those emails. Plus our AMPA website, you can see a lot of announcements, sign up for different events. Our calendar is there where we have certain events, and that is going to be new and improved. So look for those changes. But most importantly, our chapters are the heartbeat of our organization. There are over 20 chapters, and we want you, if you really want to connect with AMPA, and we are looking to connect with you, to be a part of a local chapter, find a chapter in your area and engage with your local community. So if you need help finding a chapter, you can always reach out to membership@ampa.org, and we will help you find a chapter in your area. Thank you.
Thank you, Susan. Well, today is our 1-year anniversary of the ANPA monthly webinar. For the last 1 year, we have been going at it. This is actually number 16th webinar. This is 16 webinar in 1 year. That's a lot of preparations, a lot of presentation, a lot of information shared amongst our peers. So I want to congratulate us for this accomplishment. We've been doing the webinar the first Saturday of every month. It's going to continue 12 noon Eastern time. It's free to ANPA members, and we will continue as long as we have information to share. Just as a reminder, the ANPA webinar disclaimer: the materials that are presented at this webinar is for general education purposes only, and is solely the opinion of the presenter. No webinar is intended to provide personalized financial or legal advice. It's left to the discretion and judgment, and is the sole responsibility of each attendee to determine what is necessary for his or her own practice. Neither the speaker or ANPA can be held responsible for the materials, opinions, or any advertent errors or omission in the preparation or presentation of the materials. Further, nothing in the material should be construed as an endorsement by ANPA. Again, happy anniversary. This topic today is very important on income and asset protection, knowing that I'm sure our presenters will talk about what's the most important asset for us to protect. So I'm not going to steal their thunder. But, the topic today will be financial intelligence essential for medical professionals like us. And insurance is a misunderstood asset. Today we're going to focus on income and asset protection. There is a own disclaimer. I think ours kind of covers that in summary. And our presenter today is none other than I almost said doctor from our president. Eni Kanu is an MBA, is a founder and chief investment officer of WebRx Advisor Network. He's a speaker, a thought leader, an author, entrepreneur, a friend. He's been featured in numerous professional organizations, media, including Fortune, Forbes, and Bloomberg Business Week. He is no stranger to ANPA. He's been presenting to ANPA webinar for the last year with us. I want to thank him for all of the time he's dedicated to ANPA and giving us information for free, might I add. And thank you, Eni, and you can take it from there.
Sure, thank you very much, Stanley. Congratulations to you and the leadership of ANPA at this first anniversary. What's interesting and instructive is ANPA is 25 years old now. My youngest son he turned 25 on March the 31st. And interestingly enough, in my recollection, at the very first or the inaugural convention that ANPA had, I was one of the speakers at the financial session. So this relationship does go back quite a while, and ANPA is family to me. ANPA is family to me in more ways than one. For those who don't know, my wife is a physician and member of ANPA. My father-in-law was a physician, and my mother-in-law is a retired registered nurse. So in many ways and in more ways than one, ANPA is me and I am ANPA. So thank you all for indulging me and giving to our firm and our network your trust and confidence. It's a relationship that we value and take very seriously. And so these series, hopefully, are educational and informative. So let's dive right in. I'd like to start by talking about what is in the DNA of Wealth RX Advisor Network. What is different about our team and our network? It's these two words: proactivity and a holistic approach to dealing with our clients. And I think those of you who have engaged in whichever ways you have do have an appreciation for what I am talking about. Next slide, please. The series that was envisioned by Stanley is foundationed on wealth building practices and secrets for physicians. You guys train, but you're not trained in financial best practices. So for him, in the discussions we had, it was about informing and educating ANPA members and physicians about best practices, best behaviors, the best mindset. Incidentally, it is very much in line with our advisory board, the mission of our advisory board, because, and one of them at least has spoken at one of these presentations. And I think one of the questions he did ask, or one of the things that he did talk about, was what would a Dr. Yele Aluko say to Dr. Yele Aluko 20 years ago? The education, the best practices, the behavior, the mindset are extremely important to enable and engender transformative financial actions. So the three takeaways from building wealth from our standpoint are education, transformative financial intelligence, and your thought process, your mindset. Now I want to talk about real quickly transformative financial intelligence. Transformative financial intelligence is not something that happens overnight, and it's not transactional. We have been engaged with you for a year now in this series, but we really plugged in 25 years ago. Transformative takes time. Transformative is not buy a stock or take a transaction. Transformative is about a mindset that informs what you do and how you behave. So I want everybody to keep that in mind, because that is incredibly important. Our relationships are typically anchored in education and problem solving, and ultimately self-actualization for our clients. Our clients who get there in the self-actualization phase, and I'm sure you all, most of you are familiar with Maslow's hierarchy of needs. When you do get to self-actualization, our clients that get there are invited into our Dream Your Legacy program. Our Dream Your Legacy program is a mastermind mindset for expanding and enhancing your legacy. Again, these things are informed by think who, not how. Next slide, please. Now, no, the last one. Yeah, thank you. I want to talk about what people do to build wealth. Actionable stuff. We've had 16 webinars in the last 12 months. We've had webinars and private briefings. That's why one of the reasons you have more than 12. In the private briefings, they're focused on actionable ideas that you can take specifically in relation to your practice or your personal situation. So we've had a number of those. And we will continue to have those intermingled with the monthly webinars that are usually held the first Saturday of every month at 12 noon. Actionable wealth building secrets. What do the wealthy do? The first thing they do is they focus on tax mitigation. Tax reduction is an incredibly important component of building wealth. I'll say this because most people get it wrong. Most people focus on investment returns and they're looking at 6, 8, 10, whatever the percentage returns are. And most of you here, if you reduced your taxes, you immediately, on an after-tax basis, you get an investment return on that reduction of anywhere between 20 and 40%. Now, if you're going to get 20% on an investment return, my friends, you're going to be looking to take a significant amount of risk. And I don't know if most of you have the capacity to take that kind of risk. So at the ground level, the wealthy people focus on tax mitigation because of the investment results from that. The second thing they do, and before I address this, I'm going to ask a question, and I'm going to indulge everybody here. I'm going to ask you if you can get on the chat and respond to this question. Who are the 2 richest Black men in the world? If you can put it on, write it down on the chat. I'm going to give you a book that I wrote the foreword to, written by a fellow physician, The Myth of the Rich Doctor. So the first person to respond will get my copy, an autographed copy of The Myth of the Rich Doctor.
I believe Dr. Okunsiri and myself are exempt from those questions, correct?
This question.
Yes.
Yes. Both of you are, yes. Okay, I said 2, not 1. Who are the 2 richest Black men in the world? The two richest Black men, number 1 and number 2.
Not me.
Nobody knows? You got one of them right. Who's the second one? Okay, let's do this. I'll tell you who they are. Aliko Dangote is the richest Black man in the world. And guess who the second richest Black man in the world is? Mike Adenuga. Yes. Now, what do they have in common, my friends? Besides the fact that they're Nigerian. Did you notice that? These 2 richest Black men in the world are Nigerian. What do they have in common? Equity, business ownership, and real estate ownership. But there's another secret. We're going to talk about that later. So the 2 richest Black men in the world are Nigerians, and they're Nigerian business tycoons. The third thing is use of leverage. Very smart people, very discerning people use leverage, and they use it very, very wisely. Next slide, please. So, Susan, well, S10, S10, I don't know if you said Adenuga after me or if you said what. S10 wins the book, The Myth of the Rich Doctor. So if you reach out to us, we will get you an autographed copy of The Myth and go from there. So
what is the name of the book that he won?
The Myth of the Rich Doctor by Dr. Vicky Rackner. I wrote the foreword to the book. So it's The Myth of the Rich Doctor. And the question is, doctor, what is the state of your financial wealth? Or financial health, I'm sorry. Okay. So in financial planning, I want you to think of yourself when you're looking at this pie. I want you to think of yourself as the center of the pie. If you're the center of the pie, what most people do is they are involved in one way or the other with these areas without having them integrated. And if you recall, the foundation for building wealth incorporates who, not how. So if you have all these 5 pieces of the pie and you're not working with them holistically and in an integrated way, you're really wasting a lot of time and energy that you can actually appropriate to the right expertise. Next slide, please. Okay, so I want to do something here. I want to let the slide sink in for a minute. And I want to take this moment to let you look at this slide and think about what that means. Because in the last 12 months, this is what the interaction has been about. Who, not how. You go to medical school, you have different capabilities. And most people think how instead of who. How enables you, how empowers you. I want to go back to Adenuga and Dangote, the wealthiest Nigerians, the wealthiest Black people in the world. Now think about the environment that they thrived in. Nigeria, extremely strong country with masterminds. But I'll tell you that these 2 people have used who, not how, to accomplish what they have. So what I am talking about is having you change your mindset. The most important takeaway for today is for you to think who, not how. I don't want you basically owning how these things are done, because there are people, there are experts who do these things. If you spend your time in what is the highest and best use of your time and appropriate the responsibilities for these different areas to the right whos, you will thrive. Next slide, please. I am going to thank the president. I'm going to thank Stanley and Susan for mentioning the work that we're doing. And what we've done is, in some way, replace the who with the Wealth RX Advisor Network. Now, this is not saying that we're the only ones out there that basically will provide these resources to you. But in the interaction that we have, the point and the message is you do have a relationship that at least you can consider as one of your whos and a resource for the different needs that you have. And I'll say this, behind each of these circles that you see is expertise you're going to have access, that you've had access to in the past. You're going to have access to a subject matter expert today. Go on to the next slide, please. Behind each of those circles, if you look at yourself and see Ampa, Ampa is bringing to you Wealth RX Advisor Network. And behind each of those circles, like I said, are experts and expert solutions and so on. Today, we are going to be talking about income and asset protection. If you look in the bubble that's almost directly below Wealth RX Advisor Network, you have DI and life insurance. Exactly. Thank you. Next slide, please. So I'm sure you've seen this slide many times. Foundationally, for building wealth is cash flow. Cash flow is the blood from which everything and wealth flows. The other part of the foundation is avoiding losses. I'll tell you this, most successful people suffer losses, but they learn from the losses and build on those things in multiples. We've talked about mitigating taxes, harvesting taxes is an imperative, investing tax-free, building a legacy, and growth that is evidence-based. Next slide, please. Now, what I have done here, the slide looks the same with some modifications. As you can see, cash flow is still at the base. Avoiding losses, everybody. And there's nobody that does not have cash flow as a foundation. Avoiding losses, most people work on, depending on their capacity for risk. But again, when you begin to look at the difference in building wealth, you begin to look at tax mitigation. You might recall we've had tax presentations here. One of them being a presentation in which one of the faculty members and the experts was labeled the most wanted tax man in America by the IRS. Dangote Adenuga, equity, the richest Black man in the world. What do they have in common? Business ownership, equity. Equity in all of its forms. Leverage. I talked briefly about leverage and how leverage is used by discerning people and business owners and individuals. Leverage is the X factor. If you think of leverage, leverage is your capacity to use what you have and multiply its control. Evidence-based growth is about growth that is based on the evidence of the crowds and the investment opportunities that are available to you. Next slide, please. In the next few months, our series will begin to address risk and return from a wealth building standpoint. Now, what I want you to appreciate in what you're looking at is the slides or the blocks at the ends. Most people, when they think about wealth and think about investments, are thinking about stocks and mutual funds and maybe variable annuities and maybe bonds and cash and CDs. Some people may know annuities and fixed index annuities, and everybody knows insurance. What most people don't know is at the two bookends here, alternative investments and life insurance. If you notice, alternative investments, you have losses associated with them. And life insurance, you don't. In the next few months, we're going to explore these different investments and equity as how you look at those things. But I'll tell you this, most of you here are in the 5% to 1% of income earners here in the US, if not in the world. And what happens is this, by virtue of your positioning, you have access to alternative investments that the 95% of the population do not have access to. You have access to investment strategies in the life insurance spectrum that, again, the 95% don't have access to. What happens, and the reason we talk about transformative intelligence, is because most people think like the 95%ers when they actually belong to the 5%ers. And you've got to change that mindset, which is what I've always talked about. Change your mindset and think like the 5%ers so that you can actually get the results that are relative to your place. Next slide, please. So now I've got another big giveaway, and I am going to disqualify the president, and I'm going to disqualify Dr. Stanley Okoro from this question. My friends, I want you to type in the chat room, what is your biggest asset? What is your biggest asset? The first person to type it will get a copy of my book, Paychecks and Playchecks, which I contributed and co-wrote, with Tom Hegner.
Can you show the book again?
Yes, Paychecks and Playchecks. Okay, the first person to write down what their biggest asset is, okay, I'll tell you what, I am going to give this to Ijoma O. Dr. Ijoma O has come closest to what your biggest asset is. Your biggest asset is, Stanley?
Your ability to earn.
Next slide, please. Your capacity to earn. So Ijoma, congratulations. You'll get an autographed copy of Paychecks and Playchecks. And the other physician will get a copy of The Myth of the Rich Doctor.
I want to confirm that the other physician is a physician. I'm waiting for their name. There was a private message sent to them to give us their identity. And then send the
another physician, then they're disqualified.
Congratulations to Ijoma.
Ijoma, congratulations again. So your capacity to earn is your biggest asset. Your biggest asset, if you think about it. And most people don't, and I noticed on here, some people have their business, their health, insurance, etc. Well, those things are important, and without a doubt, your health is important because you have to be healthy to earn. So you're absolutely right, to some extent, your health is important. The thing, though, is you've gone through a significant amount of training and you have come out with this expertise. And the expertise makes you a who, by the way, because you are the one that people come to for health reasons. So I'll ask a couple of questions of you. You own a home. How much is your home worth? $1 million, whatever the number is. I've had people in these sessions tell me that their home is their most important asset. How much is your home? Let's say it's $1 million. That's fine. You own a car. Let's say the car is $100,000. That's fine. Now, when you come out of college, when you come out of your training, you begin to earn and you have the capacity to earn. And it doesn't matter what the number is. When you multiply that number by the number of years that you will earn income, you'll find out that there is nothing that even comes close to your capacity to earn. And what happens is most people don't have a full appreciation for this. So they don't, one, protect that asset, or secondly, they underprotect the asset. So today, I'm going to introduce you to an expert of experts on protecting your most valuable asset. He's a veteran of the industry who's been in the industry for over 50 years. He is an expert on whose depth of knowledge in this space I have continued to lean on and to stand on. I learn from him every day. I'm going to introduce you to Mr. Eugene Cohen, CEO of the Cohen Insurance Agency. I'll tell you this, Mr. Cohen is a thoroughbred on disability income. He's an author, he's a sought-out authority, and an expert of experts. He's a founding member of America's premier disability resource organization, the PLOS Group. He's received numerous recognitions and accolades in the industry. I welcome Mr. Eugene Cohen to take it away.
Thank you very much for the very kind introduction. When you look at the highly compensated individuals, we know one thing, that disability income protection, when these policies are written, words really matter. They determine the benefits on the policy. The least expensive policy when you purchase it, many times can be the most expensive policy if you have to use it. Let's take a look at the individuals who have group coverage through their employer. Well, some folks don't have that. Many in private practice who own their own practice will rely on individual policies to protect their most valuable asset, their ability to earn an income. I have been speaking to physicians and doctors of dentistry for many years, and I always tell them one thing: go over your policy, look at it. The best time to look at your policy is when you're healthy, not when you have a disability. So let's take a look at group coverage. Group coverage is a very good foundation to an individual policy. If your employer is giving you a group policy, it's a good policy to build onto. But you must remember one thing, that group coverage has inherited many problems, and you have to look at the policy and understand it. And on individual policies as well, if you don't have a group policy, you have to look at your individual policy and make sure that you're taken care of. So the highly compensated individual has a heck of a lot to lose if they're disabled from a sickness or accident. Now, I don't suggest dropping group coverage. As I say, use it as a foundation to your program if you're getting it. Now, ask yourself a question. If I were disabled, where I couldn't work tomorrow, and I had a long-term disability, a sickness or accident, and I've seen many of these problems through my career, where individuals all of a sudden are disabled, can't work, they have a problem, and now they're analyzing their policy. Sometimes it's too late. So ask yourself this question: do I have enough income coming in if I have a group policy that will take care of me if I'm seriously disabled for a long period of time? And if I don't have group coverage, ask yourself that question on my individual policy: is there enough to pay my important bills if I were to have a disability. So I tell everybody, review their policies, look at them. Don't wait till a claim takes place and then read it. And many times you may be disappointed. Analyze it, look at it. It's important because you're insuring your most important asset, your ability to earn an income. And you spent an awful lot of money getting to that particular goal. A lot of work. I was out to dinner with an orthopedic surgeon. We were going out to dinner, and I was with his wife, and we were waiting for him. And he works in the emergency room, and she got a phone call. He's not going to make it. He can't come in. He has an emergency surgery to do. So the three of us sat there, and I could tell you that it's really a tough job for some physicians. So let's take a look at a typical example of a group policy. Let's say this physician is earning $300,000 a year. It could be 400, 500, 600, whatever it may be. But in this example I'm giving you, this physician's earning $300,000 a year, $25,000 a month. On the policy, it looks like he's well taken care of. It's a group policy. And that's how the group policy may be designed. If it's a higher income, it could be designed completely different with maybe a bigger percentage. So the policy reads they're going to pay 60% of the individual salary. Some policies just say salary. They don't put the bonus in. Very important. 60% of the salary or 60% of the income up to $10,000. That's this example I'm giving you. Well, it's $10,000 enough? May not be. You have to ask yourself that question. Now, let's take a look at that, because this individual, let's say, is disabled for a long period of time. And he or she says, I think I qualify for Social Security benefits under the disability provision. And they go and they do qualify. Let's say it's a tough definition, but this person is really disabled and it is a long disability. And the next thing you know, they're receiving a check from Social Security. And their policy says that if you're receiving benefits from another source like Social Security or workman's comp, we're going to subtract those benefits from your policy. That could be a problem. Now, there's another problem that we have. The benefits, the group policy, for example, is being paid by the employer with pre-tax dollars. So those benefits may be taxed as well. Well, all of a sudden, the $10,000 in my example is shrinking dramatically. Taxes are being taken out. Social Security benefits are being taken out. And the insured is upset. It's a problem. So we have to look at that. But there's another problem in the policy, because most group policies take mental disorders and they only pay them for 2 years. Mental disorders are common. People have that and it creates a problem, and it's a big part of claims. So some policies have that 2-year benefit. Now, the individual suffers a mental problem, they're reading their policy, but it's too late. Benefits have run out after 24 months. Very important to check that. Now let's talk about the definitions of disability. The definition of disability is important because this tells you how the policy is going to work. Your occupation, you have a lot of education, a lot of personal training. So you want to be insured properly. You should be insured in your specialty. If your specialty is orthopedic surgery, you should be insured as an orthopedic surgeon. If your specialty is obstetrics and gynecology, you should be insured in that specialty. Or if it's dermatology. You want to add, that means if you're disabled and you can't work in your specialty, but you retrain and go into another specialty, your regular occupation would have been that specialty because you could perform the substantial and material duties of your specialty. That could, but if it's not insured properly, it doesn't work like that. So let's suppose, for example, and it may be, but how long are they going to insure you in your specialty? Is it 5 years, is it 10 years, or the length of the policy? As I always say, words matter in disability coverage. If you have group coverage, another question you want to ask yourself, can the employer cancel the policy? Can the employer refuse to renew it? Yes. Comes up for renewal every year? Yeah, they can do that. Can the company say we no longer want this group? Yes, they can do that as well. So what happens? Well, the example, that's why a lot of people, a lot of physicians will carry individual coverage as well. And if they don't have group, they'll rely on individual coverage. Now you got to ask yourself another question. Is that policy portable? And what I mean by that, when I ask that question, is it portable? Let's presume you're 35 years old and the clock goes and it's 45, you get a better opportunity and you leave the organization or the employer you're with and you go to a new employer. But you've left your group coverage back at your other employer because it may not be portable. And I always use the word may because there are some exceptions. Now you go to the new employer and they say, we don't have a group policy. Now you're shopping the market. But in that 10-year period, things happened. Many things can happen. That's why I go every year for an annual exam. I want to see if anything has happened that I don't know about. And I wait for those results and I call up my physician. I say, how does it look? And he says, you better lose a few. But that's how it usually goes. But anyway, it's interesting because let's suppose you in turn have had some problems that could make you uninsurable and you're shopping the market. You can't get disability coverage. Or you have, in that 10-year period, you've developed a disc problem, bulging discs, and you've had problems with that. Then you get a policy with an exclusion rider. That's the problem. So now this is the reason why you want to be able, if you have group, you want to be able to add individual coverage to that group policy, to have your own individual policy. And when I talk about that, if my example, an individual is earning $300,000, most companies and his group policy is employer pay, where the benefits are taxable. Most companies will let that individual pick up an additional $900 or $9,500. If the group policy was self-pay, where you're paying with after-tax dollars, most individual companies will let you pick up a policy for approximately $600 or $6,500 a month. Now, when you're picking up an individual policy, these are the things you want to look at. You get to decide your elimination period. Elimination period is the waiting period. You don't need the company for the first 90 days. You could self-insure, not a major problem. The 4th month is when you would receive your benefits on the policy. Now, benefit amount, how much are you going to get? Well, we put that in the issue and participation limits with your other company, with your other policies, and the computer will tell us what you could get. If you in turn don't have coverage, we take your income, we put it in, and it'll tell us what you can get. And then you decide on how much you want to purchase. I always say one thing to anybody who I talk to. When you're buying a policy or anything, my job or the advisor's job is not to create a financial problem. It's to solve a problem. So I always say one thing: if you're uncomfortable with that amount of premium, we'll design it to make sure you're comfortable. I've been doing this a long time. So how long will they pay you? I would suggest at 65 or 67. That's when most folks decide to retire, except me. How long will they pay you? They're going to pay you to 65, 67. What has to happen for you to collect? That's important, because I always say one thing: words are important in a disability policy. You have to understand it and look at it. They're extremely important. So the definition of total disability, that's the heart of the policy. That is the provision that tells you how it's going to work. And that's extremely important. So what do I suggest for physicians, for doctors of dentistry, for nurse practitioners, for nurse anesthetists, high income people? What I suggest is that you have to be insured in your regular occupation. And for the doctors of dentistry and for the physicians, you want to be insured in your specialty. If you're an orthopedic surgeon and you have your hand damaged and you can no longer do orthopedic, with your educational background, there's so many things you can do. You're so highly trained. And now you become a family physician, or you psychologist, you retrain, whatever it may be. But you spent all that dollars and money on being an orthopedic surgeon. So therefore, the company, you want to be insured properly in that specialty so you can get your benefits if you're disabled and you can't perform the substantial and material duties of your occupation. And you want to make sure that it's a qualifying claim when you submit it. Now, whatever the specialty recognized by the American Board of Medical Specialties. And for osteopathic physicians, the Bureau of Osteopathic Specialties, or for doctors of dentistry, it is the American Dental Association. They're the ones. So as I say, you want to be insured in your specialty. Extremely important. Now, there's more to a policy than being totally disabled, because some folks are partially disabled for a long period of time before they ever become totally disabled. There are diseases that take a long time before they will make you totally disabled. And you know all those diseases because you see them all the time. So you want to make sure you have a residual or a partial disability benefit in your policy that's going to work like that, where all of a sudden you have 20% of your duties that you can't perform, or 20% of the time you're out of the office because of this disability, and you're experiencing a 20% loss of income. You want to make sure that you have that residual benefit, a strong one in your policy. So for an example, you get ill, you're out of work for, you're totally disabled, let's say for a year. Now you're going back into your occupation and you're still partially disabled. You're working gradually in, and you have a 60% loss of income. Then under the residual benefit, the company would pay you 60% of your benefits. And this residual disability benefit will continue till you get to 80% of earning of where you were before. I believe that this benefit is so darn important in a disability policy. Now we have another benefit that you have to look at, the recovery benefit. I want to give you an example. You have a disability, you're out of work for 2 years. Your physician says, you know, doctor, you can go back to work. There's nothing wrong with you now. You can work 8 to 10 hours a day. You can work just like you were working before. You have no problem whatsoever. But he or she doesn't realize it. You have no practice because your patients have gone somewhere else. So now you're rebuilding. And if your loss of income is more than 20%, then on a strong recovery period, the company will pay you a partial benefit if this loss of income was because of your disability until you rebuild your income. And some of them say to 80%, whatever each company is different. It's an important benefit to have in the policy. And that is called the recovery period. And it has to be because of that disability. Now, cost of living. I suggest cost of living benefits in the policy. I don't know what inflation is going to be. Right now, they say inflation isn't very high. I believe the last 10 years, the last time I looked, I think it was 1.4. And you can tell us more about that. But I think that's about what it was for the last 10 years. But I don't know what it's going to be the next 10 years. So with the cost of living rider is so darn important because when you have this rider and this benefit, which you pay for, if you're having a long-term disability, and let's say you pick up a 3% cost of living rider, every year they look at the consumer price index, and if it goes up, your benefits would go up during that particular disability. So that's an extremely important benefit to have. The other is protecting your insurability. This is important. And I'm going to say something if there are any residents on this call. This is extremely important for residents. As soon as they become a resident, there are companies which we know of that will give them $5,000 a month with no income qualification. And they in turn, then actually they would write it with health qualifications. And then after they are out, then they can raise it and protect their insurability with a rider that they put on the policy, protecting their insurability so they can buy it at a later date. So anybody who is under 50, when you buy your policy and so forth, you want to make sure you have a benefit on there that can increase your benefit at a later date without taking a medical exam. Each company is completely different. It's extremely important on a policy and extremely important for people who are in the resident programs that the colleges have to make sure that they have a benefit like this on their policy. Another thing is, for people under 50, I saw on one of the, each company is different. Remember, there are a lot of companies writing it. Each one is different, but one of the companies I looked at, they say, if you lose your group coverage because of no act of your own, they in turn will let you, if you're under 50, they will let you add individual coverage with no medical underwriting, just financial underwriting. Extremely important to have that benefit on your policy. Now, I have been talking about policies to protect your income, your personal income. If you own your business practice, I can tell you there are policies that will protect your practice, your business practice. If you own it, there are policies. I do not have the time to get into these policies today, but if you're interested in it, you can contact Enyi and he will set up some time for us to discuss it. Extremely important. And I'd like to thank you for the opportunity to talking to you. I hope I've helped you to some degree to understand disability income protection. It's important to protect your existing assets because, quite frankly, if you have a serious disability that's going to disable you for a long period of time, your assets will melt away. Thank you for your time. Bye-bye.
Thank you very much, Eugene. I think we're going to open it up to questions. Stanley, you want to kind of moderate that?
Yes, I was going to ask Eugene to stay on the line. I thank you for the time discussing disability insurance, which is very important. There's so many horrible stories. I know you didn't get into it, but can you talk about the health rider again? Because I think that's one of the most important ones. Because if you don't get the health rider, and as you get older, and your income, I was going to ask you, as your income increase from residency to practice, and if you don't have a health rider, and now you have an increased income, how do you increase your income without increasing your premium? Can you just hit that for a minute?
Well, how can you increase your policy without increasing your premium?
I think he meant coverage.
Oh, coverage. Okay, when you the reason why, and I'll use a resident for example, and I've had these cases and so forth. I've had residents where they've developed problems during their residency, and they do have the $5,000 a month coverage, and now all of a sudden it's important to have this benefit increase rider or benefit update rider, whatever we want to call it. Now they're getting out, and now they get a employment contract. I've read many of these employment contracts. They're quite lucrative. Now all of a sudden their income jumps from, let's say, 50,000, 55,000 to 250, 275,000. But the reason why they want to have that option on their policy is because now they in turn can buy a policy with only financial underwriting. So let's presume this young physician developed problems and so forth. They in turn are protected. Their insurability is protected. Now, naturally, their new policy is going to cost them more. They're adding on, but they're a heck of a lot better position than they were. Now, there is one company that we saw where with the young physician, they'll say, look, while you're in your residency, we'll let you buy a policy for as low as $1,000 a month. So you can have this rider when you get out, which is a tremendous selling point. I don't mean when you get out, but when you graduate and get that employment contract or go into private practice. And then naturally they pay more and they have benefits. And the chart tells them how much they can increase their coverage. So if they have a $5,000 a month policy and they sign an employment contract, $250,000, then the company will tell them how much more they can pick up to protect. And they should always pay their premiums with after-tax dollars. That's just throw that in because of the benefits, but that's how it would work.
If you have any questions for Eugene, please you can ask your questions yourself. The floor is open.
Yeah, just unmute yourself and ask away.
If there's no question,
one quick question, Stanley. So thanks, Eugene, for your presentation. My question now is, if one is interested in pursuing all the different policies or the policies you've just described, am I right to say that your office will be open to that suggestion, as to how much these policies will cost, so that, over time we all get acquainted, because there will be a lot thrown at us from different insurance agencies and all of that stuff. What's your take on that?
Well, we could naturally, and you would set up a time, and then we would naturally confer with you and go through everything with anybody who wants to know about the particular policies. And we'll try to help you as much as we can.
If I could just jump in there, and Chris, I think your question again goes to that who. Because if you have the right who, and again, it doesn't have to be Wealth RX Advisor Network, they should be able to orchestrate the right policy review for you and incorporate the elements that Eugene talked about. Dr. Mora, I know you wanted to say something. Can you please go ahead and do that?
Oh, don't worry, I'll ask privately. Thank you.
Annie, I have a video to end wait. I have a 2.5 minute video. Can I play that while people are putting their questions together?
Certainly, please. Thank you. I think you need volume.
Hold on. Is the volume is up?
How was your flight, huh? Did you like these specialists?
The flight was fine. And I really like Bamadi. He's one of the docs who started the practice. Smart guy.
So tell me.
Well, their assessment's pretty much the same as the last two specialists. The degenerative nature of the arthritis may have been caused by a food allergy, if you can believe that. They're going to run some more tests, but the damage can't be reversed.
Are there any clinical trials or surgery options at this point?
Jody, this isn't going away.
Oh, honey.
Yeah, well, I wasn't holding out much hope, but this last consult kind of seals it. There are other consequences to this, Jody. I had a discussion with Alex on the way home. Keeping the office running, even after the couple of layoffs we had, it's just not sustainable. I have to close the practice.
You what?
I'm going to have to reinvent myself. And the office will have to be shut down.
What does this all mean, Stu?
We're going to have to make some adjustments. And I don't need Alex to tell me this, but the next thing is, we're going to have to sell this house.
And move? Where?
I don't know, but how can we afford to live in this home if I can't operate?
Well, why not hire a surgeon to fill in?
Well, it's not that simple. And there's no money to keep the practice running. Plus, we'll get murdered in taxes if I start pulling money out of the retirement account. Besides, that won't last. And then what? No. No, the house has to go.
Well,
Thank you, Stanley.
thank you very much. All right, guys. Any questions? I know we are about a few minutes over our 1 hour allocation for this webinar. If you have any questions, you can always, I'm going to share Amy's information. So you guys can reach out to Amy. This is how to reach WebRx for doctors. We do have a landing page for Ampa, and that's their phone number. Amy, do you have any closing comments before I take it up to Dr. Okusuri to close us out?
No, thank you very much. I hope that in the hour plus that we have spent, you have found or realized how much of an imperative and how important it is to have this foundation in everything that you do. So I invite you to look at what you may have now in your policies, just to make sure that you're properly covered so you don't suffer the fate of the physician in the vignette that you just saw. Finally, next month, we're going to begin to talk investments and investment strategies. If you recall the continuum from alternative investments to life insurance, we're going to explore those over the next few months and hopefully inform how you make investment decisions and how you make those choices. And in one of those months, we're actually going to have, hopefully, some private capital type presentations that would educate you on the kinds of opportunities that are available to you, the 5%ers and the 1%ers that are not available to the 95% out there. Thank you again, Stanley. Thank you, Chris. Thank you, Susan. Thank you, everyone, for coming. I'm going to give it back to you guys.
Thank you very much, Amy. Our next AMPA webinar is May 1st, the first Saturday in May at 12 noon. Dr. Okunseri, you can close us out for April.
Thanks, Stanley, and thanks to everybody who have been participating on this conference call. I wish you guys a happy Easter celebration. And again, thank you very much. Look forward to seeing you guys soon.
Thank you. Have a wonderful day.